All right, well, good evening. My name is Ursula Coleman, and I am the co-chair of the Torch of Wisdom 2026 Home Buyers and Sellers Resource Experience. I want to welcome you all to our live panel discussion and Q&A. This event is being presented by the Torch of Wisdom Foundation in partnership with the Southfield Alumni Chapter of Delta Sigma Theta Incorporated, the Women's Council of Southeastern Michigan, and sponsored by Fifth Third Bank. I hope that some of you, if not all of you, have taken the opportunity to look at the videos that have been released over the last 3 days. I know that there has been a ton of information that is both formative and useful to the purchasing and buying of homes. I'm really excited about tonight, though. Tonight, we have the live panel discussion with the housing experts. And as a bonus, you guys get to ask those burning questions that you've had about the home buying process and about selling your home, maybe upsizing, downsizing. They're here to give you that knowledge. So what I would suggest that you do is you take out your devices. If you're analog like me, you get some pen and paper. You sit back, jot down some questions, pop some questions or in the chat, take some good notes, and enjoy. Next, I'd like to introduce to you Whitney Lewis, the Vice President of the Torch of Wisdom Foundation, as she would like to offer you some words. Whitney?
Thank you, Ursula, and good evening, everyone. Welcome. Again, my name is Whitney Lewis, and I have the privilege of serving as the Vice President of the Torch of Wisdom Foundation. And I thank you for joining us for our home buyer and seller resource experience. At the Torch of Wisdom, we believe that economic education changes lives. And one of the most powerful ways families build stability, opportunity, and generational wealth is through home ownership. That's why we're committed to equipping our community with the knowledge and trusted resources needed to make informed financial decisions. Tonight, as Ursula just said, is your opportunity to take the learning one step further. In this session, this is all about you. And we encourage you to ask those questions, seek clarity, and take advantage of having so many experienced professionals gathered in one place. We're so grateful for the partnership that has made this series possible, including Fifth Third Bank, the Women's Council of Realtors, Southeastern Michigan, and our partners from the Southfield Alumni Chapter of Delta Sigma Theta Sorority Incorporated. It is now my pleasure to introduce someone whose leadership and commitment to service have made a lasting impact on our organization and our community. She's a former president of the Torch of Wisdom Foundation and now the current president of Southfield Alumni Chapter of Delta Sigma Theta Incorporated. Please join me in welcoming Miss Yolanda Durfield.
Well, thank you, Whitney. And that was a wonderful introduction. So thank you and good evening, everyone. Welcome. My name is Yolanda Durfield, and I'm the proud president of Southfield Alumni Chapter of Delta Sigma Theta Incorporated. So I want to thank each of you for being here tonight for this home buyer seller resource experience. At Southfield Alumni Chapter, we remain committed to advancing economic empowerment, financial education, and generational wealth building opportunities that are going to strengthen individuals, families, and communities. And this is why this event is so important to us. I would like to extend a special thank you to the volunteers of the Economic Education Steering Committee, along with all the phenomenal partners that you see here today, the Torch of Wisdom Foundation Incorporated, the Women's Council of Southeast Michigan, and Fifth Third Bank for this collaboration and our joint commitment to expanding access to home ownership. As you participate tonight, I encourage you to ask questions, connect with our experts, and take advantage of all the resources that are being shared tonight. One conversation, one insight, and one new connection could be the next step toward achieving your home ownership goals and building a lasting legacy for you and your family. So, thank you for being here and investing in your future. Now, I'd like to turn it over to another amazing partner from our realtor from the Women's Council of Southeast Michigan, and also a member of Delta Sigma Theta Sorority Incorporated and a member of Southfield Alumni Chapter, our amazing partner, Etwa Libet. And Etwa, you're on mute.
You're still muted.
Thank you so much for that wonderful introduction from our illustrious president. Not only am I a real estate professional, but I am the president of the Women's Council of Southeastern Michigan. Many of you may not be aware of who that is, but our mission is to encourage leadership, education, and the exchange of information through group learning techniques and to provide the opportunity for women to increase their knowledge and expertise in all facets of real estate, and of course, pass that on to our communities. Thus, I am here this evening as a sponsor. With that, I would like to introduce to you CJ from Fifth Third. She is the senior CRA mortgage specialist. CJ, it's on to you.
Hi, good evening. I'm so happy to be here with you today. I am the senior CRA loan specialist here at Fifth Third Bank, and I am so happy to be here and be a part of this and also be a sponsor. As a CRA loan specialist, we are committed to community. CRA is all about community and reinvesting back into the community. That's what it's all about. So, as your moderator, I am going to oversee the different committees that are coming to you, the groups that are going to be speaking. And the first one that I am happy to bring to you is Getting Financially Ready to Buy. And we have some experts that are going to be presenting and introducing themselves to you. The first will be Crystal Gunn and Erica Hall. We have Byron Suggs, and then we also have Eric Dusenberry that will be coming to you to cover this area. Crystal, would you like to introduce yourself and tell us a little bit about what you do?
Absolutely. My name is Crystal L. Gunn. I am a financial healer, life insurance agent, legacy strategist, founder of United Community Solutions and the Financial Wisdom Institute. I'm really all things financial education. And from financial education, ancestral wisdom that goes along with it, and the healing that needs to happen in order to move to your next level financially. And so thank you guys so much for inviting me here.
Okay, and yes, and next we have Erica Hall. Would you please introduce yourself and tell us a little bit about what you do?
Yes, thank you so very much. Good evening, everyone. Erica Hall with EH Wealth Advisors. Listen, I've been in the financial industry for over 26 years now. And I think it's the best industry to be in. Why? Because this helps you build that foundation for everything that you're going to do. That's why it's so important to build financial literacy. Here at EH Wealth Advisors, we practice comprehensive financial building, legacy planning, wealth management, and we do it definitely from a spiritual perspective. In addition to being a registered investment advisory firm here in Southfield, Michigan, I'm also an assistant pastor at the Mount Pleasant Missionary Baptist Church. And so I believe there are some spiritual principles, some biblical principles that we can apply to how we manage our finances. And when we put those principles into play, they become habit forming and they help us to apply them to everything that we do. And so hopefully you've had that opportunity to watch some of the tips and seeing how they help you to build that foundation so that now, as you're getting ready to be a homeowner, you have some habits that are going to help you to be successful in expanding your financial portfolio and expanding your financial literacy and even generational planning. And so before I go, I just want to
Okay.
thank all of the sponsors today who invited me to be here today. And I hope you get some great information.
Okay, great. Thank you for that introduction. Okay, Byron Suggs, if you could bring your information and tell us a little bit about yourself.
Hello, everyone. My name is Byron Suggs. I am in the mortgage industry, also a realtor as well. So I've been in mortgages since 2003. So I've been through all the ups and downs, everything that's come along with being in this crazy industry. But I'm a broker, so I opened my own company back in 2020. And the main reason I did so is because I can help more people like us to get into home ownership. When you with a lender, you can only offer what that lender has. But I'm a broker, so I can pretty much offer everything. So I work with about 30 different lenders. So from first-time home buyers to home renovation loans to investment loans, I can kind of do everything. So I'm just here to assist my community as much as I can.
Thank you so very much. We are so happy to have you here, Byron. And next we have Eric Dusenberry from Mishta. Mishta, Eric, tell us a little bit about yourself and what you do.
Sure, CJ, thank you very much. Yeah, I'm an account manager for the home ownership division for Mishta, and Mishta is the housing authority for the state. So we have programs like down payment assistance, federal tax credits, and we try to do a lot of outreach into the community so everybody knows what we have available to help you buy a house. Thank you.
Okay, wonderful.
Yeah.
Well, I'm going to kick it off with some questions that our guests might have and might be wondering about. Let's start with the question of how much home can I realistically afford? Of that panelist, who would like to answer that question? Just go ahead and get started.
I would love to answer that question. So
Okay.
when you talk about buying a home and you go get that pre-approval, right? They're going to pre-approve you based off of your gross income. But the one thing that you have to remember is that you pay your bills off your net income. So when you talk about what you can truly and realistically afford when it comes to buying that house, that pre-approval is good on paper, but you really and truly have to look at the numbers that you are working with, because the one thing that you want to be able to do is afford the house, keep the house, and not have to spend the rest of your life in the house. And what I mean by in the house is on the front porch or in the backyard because you can't travel because you've spent all of your money paying that mortgage bill.
Anyone else want to add a little something to that?
I'll piggyback on that and to say that, your house, typically your home that you purchase becomes one of your largest assets, but it's the beginning of building your wealth. And so your home the cost of your home should be about maybe 30 to 40% of your income, your gross income. And as Crystal talked about the net, when they consider your pre-approval, they don't know how much you're paying for childcare. They don't know how much you're paying for subscriptions. They don't know how much you're paying for all the other things that you have obligations to. And so you have to make those financial decisions based on your financial picture and not based on the pre-approval.
Great. Okay, let's ask Byron a question. Byron, what credit score do I need to qualify for a mortgage?
You can as a first-time home buyer, most times you want to put down as least as possible. So to put down as least amount as possible.
No, I said what
Qualify, you need a
credit score do
580.
we need?
Yes, two different. So a 580, you can put down as low
Okay.
3.5%. But let's say if you have a gift of equity or you have savings or 401k, you can be as low as a 560 and still buy a home, FHA.
Okay. And yes, that will vary from bank to bank. You know, at Fifth Third, our minimum is 600. So it depends on where you're going. That's for FHA. So it will depend on the lender. But that's a great answer.
And
It's good to know that we can go below 600 as well.
Mm-hmm.
And CJ, can I chime in? Don't let the minimum be your maximum, though, right? Because you can go
Absolutely.
a 580 or a 560. The higher your credit score, the better, because now you qualify for more down payment assistance options. You qualify for potentially better credit scores. Even that primary mortgage insurance, the higher your credit score is, the lower that rate is going to be, plus your homeowner's insurance. So don't let that lowest credit score be your minimum when you want to buy a house.
That's excellent. And next one I want to ask, how can I improve my credit score before purchasing a home? Eric, would you like to say something about that?
Sure. Yeah. You know, a lot of things about improving your credit score are trying to not have too much credit open, not have too many inquiries on your credit report, and not having your credit maxed out. You know, all those things kind of come into play when you're looking at your FICO score. So what is usually suggested many times is to get that home buyer education early, figure out where your FICO is so that you can make adjustments to that as time goes on. So starting with the counseling side of things, working with lenders, those are all good things to do for people to get ready. It gives you a yardstick of where you need to go, where you need to be, so that you can hopefully successfully end up buying a house.
And also,
And we're right there in your,
if you have
go ahead.
collections and judgments, you must pay those off if you want your score to go up. And it doesn't matter. I see it all the time. Clients have collections for like $70. A collection for $70 is no different from a collection for $10,000. It hurts your credit score the same way. So please pay your collections, especially if it's yours. If it's not yours, dispute it and have it removed over time. But if it's yours, you have to take care of it if you want your score to go up.
Yeah, and some of the basic things that are just straightforward, right? 30% of that score is, capacity, paying down the balances, ideally close to 30%, below the limit, and also making sure they're paid on time. So one of the things I try to tell clients to do is, if you can, two strategies. One, put at least the minimum payment on auto pay, so it's never late, especially when you're getting ready to have scores pulled. And then set those payments on the posting date versus the due date, so that before the credit card balance is reported, it's already paid down before it's posted. That's a big, big tip.
Excellent tips. Excellent tips. And so next I want to talk about down payment assistance programs. Eric, I know that's right in your wheelhouse, and we have some more information to add, but why don't you tell us about what MSHDA can do?
Sure. Down payment assistance, you know, obviously the state has down payment assistance. That's kind of what we do. It's up to $10,000. It can help with your down payment and closing costs and your prepaid expenses. MSHDA has some pretty simple requirements. You have to be under an income limit, 640 FICO, 45% debt to income ratio. There's a lot of jargon for the participants out there, but lenders can help you get pre-qualified for MSHDA. I also want to say that there's a lot of great programs out there like yours, CJ. You know, you have to kind of collect all the information, see what fits you best, because there's no one fit thing that goes in that's better than the other. So, and that's kind of hard to do. You got to work with a lender that's kind of knowledgeable about their programs, MSHDA programs, Detroit programs, whatever could be out there.
Excellent. I do a lot of MSHDA loans, and for that very reason,
Yeah.
it's a great opportunity. Even though, you're getting that $10,000, you don't have to make any payments, and it is a lien on title. You do have to pay it back if you sell the home. But where
Right.
else can you get $10,000 to help you close on a home? And here at the bank, we do add $2,500 to that if that property is in a low to moderate income area, which is most of the city of Detroit. So
Right.
there's a lot of properties out there that qualify, not only in the city. Just an example, my sister bought a home in Redford Township. and she was able to get over $3,000 from the bank because based on her income, she was considered low to moderate. So it's not just based on the property. Keep in mind also based on your income. Byron, do you have something you want to add for your area?
Oh no, when it comes to down payment assistance, I refer people to MSHA. Like, there's not too many programs better than MSHA. Not in my allotment anyway.
But we don't want to forget, we also have National Faith, 25,000 if you're a resident of the city of Detroit. Those funds are still available, everyone. So if you're a resident of the city of Detroit for at least 12 months and you qualify for a FHA, VA, or conventional mortgage, and you have the income limits also, just let everybody know, have been increased. It's now like $58,000 you can have for one person and still qualify for this program. So this is good information to know. Does anyone else have anything they'd like to speak on down payment assistance before we move on?
2-minute mark.
Okay. All right, great. With this, we're doing very well. Let's do we have any other questions? I want to just go one more. Should I get pre-approved before looking at homes? Does anyone want to take that question?
Absolutely. If a realtor take you looking at homes without being pre-approved, I'm gonna tell you right now, you don't want to work with that realtor. No, realtors aren't
Absolutely.
paid hourly. They're paid to show homes once a home and close it. So you want to see how much you can afford. And then from there, you want to take that to know how much you want to afford. So you may be approved for 300,000, but you may be comfortable with a mortgage for 200,000.
Okay. And what resources are available for first-time home buyers? Does anyone want to take that one?
CJ, can I interject for just a moment before we move into that question? We do have a question from the audience. And
Okay.
this question
I
is,
can't see that.
that's fine. This question is specifically for Erica Hall. Just to clarify, did you say set your automatic payments for credit cards on the posting date and not the due date?
Correct. Yes. That is a great strategy. So you want to look at your bill statement, and it'll tell you when the statement closed. And typically, the months aren't the same every month, so it'll be around the same time. But the posting date is different from the due date. And so the posting date typically is a few days before the due date. And that means that posting date is when they post the balance to your credit report, when they report the balance. And so you can pay down that balance or pay off that balance. And so by the time it's reported, it's lower than what it would be if you paid it on the due date. And so you want to make sure you make that payment on the posting date. You can look at your credit card statements and you can see the cycle billing date. And when that cycle ends, that's the posting date.
Okay. Wonderful. Well, I think we're going to move on from here. And if you have questions, please, write them down, and we'll be sure to try to get them later on in our question answer session. Thank you so much for this first panel. We appreciate you guys for being here, and great answers to these questions. Thank you so much. We have group number 2. We are going to be talking about finding, buying, and selling your home. And we have on this panel, we have Etoile Libet. Is that Celise McCain, Carl Williams, and Steve Huntington. We have Etoile and Celise are our realtors. Carl Williams is our appraiser, and home inspection, Steve Huntington. Great experts for these questions. So would you like, starting off, if you would, Etoile, give us a little bit of information, introduce yourself, and tell
Sure.
us a little bit about yourself.
Sure. I am Etoile O'Rear-Libet. I am the broker owner of Starlight Properties. And also, I am a developer and consultant, GWO Developer and Consultants, LLC. one of the things that the association, I belong to a couple of associations. I'm not only a realtor, I am a realtist. The realtist is the National Association of Real Estate Brokers. And the idea of becoming a developer is so that we can increase the inventory. We have short inventory right now. We have buyers who are out there looking for homes and cannot find them. And so I went through their development course, and that is one of the other things that I'm working on. The other thing that I wanted to mention, I look at myself as a problem solver. I will be your guide from beginning to end, from that pre-approval all the way to the closing and beyond, because there are things that happen beyond the closing. But there are two things I wanted to talk about.
Okay,
One
well,
of
we're just doing
them.
introductions right now.
Oh, okay. All right.
Okay, so just hold your thought. Okay, so Celeste McCain, if you could introduce yourself and tell us a little bit about what you do.
Hey everybody, my name is Celeste McCain. I'm an associate broker at Robinson Realty and Management Group. I specialize in helping first-time buyers, sellers, investors. Before I got into real estate, I had a background in data analysis. So a lot of the information I offer clients is from a numbers perspective, but I also really enjoy educating people. So with the combination of teaching and helping people understand what the different numbers and acronyms and things like that mean in this industry, that's pretty much the gist of what I do.
Okay, thank you. We're so glad that you're here.
Thank you.
Next we have Carl Williams, appraiser.
Hi, my name is Carl Williams. I am a real estate broker, a licensed mortgage loan originator, but I spend most of my time, or 90% of my time, as a certified general real estate appraiser, and I work with Saturn Appraisal Group.
Okay, awesome. Okay, now we have Steve Huntington, home inspectors.
Oh, my name is Steve Huntington. I'm a licensed builder for over 37 years. Also, I'm a master certified inspector. Been in housing business for a long time as a contractor, builder, doing remodeling within the city. And also, I'm certified in motor air quality as an inspector. You can always listen. You can hear right now with the real. Sure. That's what I've been doing for the last 40 years. So I can definitely be a big help to you buying a house.
Okay, Steve, I'm having a little difficulty hearing you, so if you can either come a little closer to the mic or speak up a little bit. Are you there? You're muted.
Hey, can you hear me okay?
Yeah, a
How's
little
that?
bit better. A little
Little
better.
Okay.
Yes.
Okay. Repeat that. You need me to repeat what I just said?
No, I just wanted to let you know we needed you to speak up.
Okay. Yeah, I got you.
Okay, wonderful. Well, thank you so much. I appreciate you all for being here. So let's get to it. For group number 2, how do I know when it's the right time to buy or sell? Etoile, would you like to take that or start us off? Unmute yourself.
One of the things that I do is have a consultation when I first make contact with an individual. And as I was saying, I consider you my guide, or I consider myself as your guide, as well as the person who helps you to answer that particular question. So I have a list of questions. and answers. And once we get those questions together, then we can decide when the best time for you to purchase is. Of course, one of the first things we do is the pre-approval. And a lot of times the pre-approval will show, well, you're not quite ready. A lot of people don't know their credit scores. And so I will send you one to a certified HUD approval class. And that class can help you not only to understand the process. I'm going to explain the process to you, but also they will explain the process to you. They will get you ready. If you are ready, they will get you ready for down payment assistance, and they will help you to increase that credit score if necessary. So this is my 40th year in real estate. I've seen the good, the bad, and the ugly, along with Carl and Eric on here, I know. But longevity isn't what makes you know what to do. What makes you know what to do is continual education. So I want to bring up something that I wanted to include in the last discussion, but I was not in that discussion. So reparation generation applications are back. And this is something that offers $25,000 in assistance for individuals for reparation. The individuals, and this is reparation from having been your past. You come from slaves. And there are orientation sessions. There are 7. Each person has to take one of the orientations, and then they put in their applications. One of the things that the individual does is trace their ancestry to make sure that they are ancestors of slaves. And so this program is back again. I do know an individual who got it 2 years ago. She got $25,000 toward her down payment and closing cost, which really brought her home, cost of her home down. So what I'm suggesting to everyone out there is go online and look for reparation generation. And it tells you, you'll go to a website, tells you all about what reparation generation is and how to apply.
Okay. Thank you for bringing that up. I did hear about that myself recently, and it is back live. So many times you can go on the internet and look up down payment assistance, and it'll give you a list of some things that are available. So just keep that in mind. We can talk about that more later. One other thing you want to ask about buying and selling? What should I look for when I'm choosing a realtor? Would you like to answer that for us? I'm sorry, Celise?
Sure. I think the biggest misconception people have about the work realtors do is that people assume realtors sell homes. We don't. The home belongs to the seller. It doesn't belong to the agent. Realtors sell their expertise. And so, as a result of that, when you are doing your due diligence looking for an agent to help you buy or sell a property, The single most important thing you need to scan for is expertise. If the agent works primarily with investors, probably not the best person for a first-time buyer with a 600 FHA loan. If the person works primarily with people using down payment assistance and you're an investor, probably not the best person for you to use. So I think when you're looking for a realtor, and I'll even broaden it to any real estate professional, you need to make sure that that person's expertise aligns with what your goals are. So if you're buying a duplex, don't hire a realtor that's never sold a duplex before. If you are buying in an area that has certain like NEZ or certain like property tax thing, like don't buy in an area where the realtor is not informed, because they're not selling you the house. The house doesn't belong to the realtor. The house belongs to the seller. You are at the mercy of that person's expertise. So I would say that is the key thing you need to scan for when looking for an agent is, does their expertise align with what your goals are?
Okay, wonderful. All right. Thank you for that
One more
answer.
thing I'd like to add,
Um,
if I
for
might.
the sake of, go ahead. For the sake of time, I need to keep moving if you don't mind. Okay, we can get it later.
TJ,
Okay.
we have time for one more question in this group.
Okay. For the what is my home value how is my home value determined? Carl, can you answer that question for us? Carl, are you there? Is he still there?
He's on mute.
I'm sorry.
You have to
Basically,
unmute yourself.
I think I'm unmuted now.
Yes, go ahead.
Basically, what your home is worth is what similar houses in your neighborhood or market are selling for. So a lot of times the seller knows better than the appraiser when he first comes out what his house is selling for is or worth, because he knows what the neighbors are selling for. But what an appraiser does, he compares your house or the house in question, the houses, the same square footage, bedroom count, as similar as possible, and what they sell for is what your house is worth.
Okay, thank you. Thank you so much, panelists. We appreciate each and every one of you for being here. We will, for the sake of time, I'm not to cut anyone off. Please forgive me. We need to keep moving.
TJ,
So
I
our
do
next
have
section.
2 questions from the audience.
Okay, great. Thank you.
The first question, I'm going to go backwards down. And this question is for Dr. Libet. Is reparations just for buying homes in the city of Detroit or any city?
It's actually a national program. So when you go to the reparation generation, they will have an About Us program so that you can see exactly where it's available and to whom it's available and what kind of application you need, what needs to be on your application.
Thank you, Dr. Libet. And the other question from this section is, I already own my home, my primary home, I apologize. What strategies can I use to finance additional properties while keeping my monthly payments as low as possible until it is occupied? Or are there programs or incentives that are available to keep the payments low?
Okay. Well, I can actually answer that question just to the point that you can still receive down payment assistance even to purchase rental property. A lot of people don't realize that, but this could help you in what you are looking to do. It depends on where the property is located. If you're buying in the low to moderate areas, those properties still count. We're still trying to increase home ownership across all the cities. And so that's one of the ways that can help you assist you with even closing costs. And that's huge, because typically you don't get that type of assistance when you're buying investment property. So it's good to know that even when you're buying investment property, you can get some help.
Thank you, CJ. Miss McCain, I saw you unmute as well. I felt like you were trying to jump in there too. Can we hear from you as well?
Yeah, it's fine. I was just gonna mention that if you already own a primary home, when it comes to the down payment of that second home, it's not gonna be the 3.5% you bought the first home with because it's considered a second home. What you can do to offset those costs, depending on how much equity you have in your first home, you can use some of that equity to finance the second home. If you want to keep the payments low on the first home, because it sounds like this person wanted to maintain what their payments were on the first home and make the second home a rental property. If you're staying in your first home and you have a fixed rate mortgage, that's not going to change. The only thing that may come up is if you're planning to buy a new home, like say you want to upgrade and you're moving from that first home, it would not be considered a owner occupied residence anymore. Some lenders would ask you to refinance for that. But another solid strategy I tell people to use is use concessions. If you see a house has been sitting on the market for longer than what's normal for the market, ask the seller to cover some of the closing costs, and you can apply that towards buying down the interest rate or your closing costs to keep money in your pocket. So that's was just my little spiel. It depends on, like everything, what exactly your end goal is.
Okay, thank you so much for that added information. Okay, so we want to go into our next session, which will be both yourself and Etoile, and we're going to go into closing the deal. So let's talk about that a little bit, closing the deal. All right, so what happens during the closing process? Would one of you like to take that?
Sure. I think the part that's most disgruntling for buyers is that the mortgage company will ask you for the same information 5 or 6 different ways. As crazy as this sounds, money laundering is really easy to do in real estate because everything costs thousands of dollars. They're just trying to prevent mortgage fraud and money laundering. So it's not personal. You will have to show the pay stub and the bank statement that the pay stub was deposited into, and the tax form from the bank statement that the pay stub was. Like, they connect all the dots to make sure no fraud is being committed. The other thing is, while that's happening simultaneously, title will be making sure that the person selling you the house actually has the right to sell you the house. The worst thing in the world for you to do is to take out a 30-year loan on something, and then in year 3, somebody comes knocking at the door saying, hey, you got to get out. This house was actually my grandmother's house and it was deeded to me and I want it now. So you got to go after you've put in those new cabinets, floors, and countertops and stuff like that. And it happens. So while the mortgage company is making sure that you're not trying to defraud them, the title company is making sure that all of the ins and outs, the pluses and minuses of the transaction are what they're supposed to be, and that most importantly, the person who's selling you the house actually has the legal right to convey the title.
Okay, that was going to be my next question. Etoile, would you like to go on that a little bit more on just explaining
Sure.
what is title insurance and why should I have it?
Oh, okay. But first, I want to say that closing is a process. And so the process is not just that day, as was said by the other real estate professional. Yes, the closer you get, the more paperwork you may be asked, but there are some other things that are considered along the way. There are some don'ts. Don't purchase anything. Don't purchase a large anything. Don't make big deposits. Don't make sure that everything is level. Just keep your credit score, what you own, no big car. I have a story. We get to closing. And 2 days before, the lender says, what did the buyer buy that was 40,000? This was some time ago. The house was 45,000. It was a Lincoln Explorer that he wanted to surprise his wife with. And so we didn't close for a little while after that. But the whole idea is it's a process from the beginning to the end. One of the things in selling the home and buying the home that I want to get to the quickest is title work. The title work, I want the title company not only looks at the house to make sure that the person who's selling the house can sell it, but also they look at the person who's buying. Because once again, that person may have a tax lien. And if they have a tax lien, especially an IRS tax lien, that's going to have to be paid off. There may be liens on that house as well. And those liens may have to be paid off. And all of those things have to be taken into the whole process to get to the closing. But it is also important for the title company to look at the buyer as well.
That kind of goes into what our final question was going to be is, what legal issues can affect a home sale?
All of them. If you got into a car accident and did not pay whatever the settlement was, and you're supposed to get a nice $100,000 check when you sell your house, guess what? If you, to the other broker's point, if you have an IRS lien and you were untaxed for half the year because you didn't want to give up your bonus, guess what? If you and your sister cannot decide on how mom's house is going to be sold, and you guys haven't talked in 2 years since your mom passed, guess what? The other one I can think of is that, what's most common is the quitclaim thing. A lot of people think all deeds are created equal. They're not. Just to give you like a super high level quick, because I know we're pressed for time. A quitclaim deed is essentially a seller saying, I'm not guaranteeing I have any rights to this property, but if I do, I'm conveying those rights to you. Because there's no guarantee in that, that's probably the easiest way to get scammed on purchasing a house. You want to make sure when you're purchasing your house, there's a warranty deed, which warrants that the seller does have certain interests in the property, so that when you go pay your property taxes or when you get ready to do something with the city, you don't have to have a tough conversation with a county worker. So that's my little spiel on that. But if you got any unsettled debts, if you owe somebody, they're going to find out about it when they do title. And if you are selling a house that you don't actually own, or if somebody is trying to sell you a house that they don't actually own, that's going to come up in title as well, because they have to clear all that to make sure everybody is doing what they're supposed to do the way they're supposed to do it.
And
Thank you,
quickly,
Celeste.
one last thing.
Yes, ma'am.
If you have filed bankruptcy, either the buyer or the seller, that comes up as well. And if you are the real estate professional, you have to be ready to go through a lot of paperwork, and that buyer or seller has to be willing to help get all of that cleared out, because the bankruptcy they're going to get their money first. So the buyer or the seller could end up having to, depending on how it's negotiated, bring money to the closing to exchange the house. So
Thank you. Okay, we're going to go into our last segment, which You've real estate professionals. I really appreciate all your years of experience. Excellent, excellent, excellent answers. Next, we're going to go into protecting your rights and long-term success. And for this, we've got Eric Dusenberry from MSHDA and Etoile Libet. That's our next section. So let's see what juicy questions I have for you for this area. Okay, so this would be protecting your rights. A lot goes on in protecting your rights. So one of them is, what are my rights under the fair housing laws? Would one of you like to take that?
Yeah, basically, under the fair housing laws, they treat things two different ways. They can't have any discrimination towards the buyer of the home through the application process, through the buying process, and things like that. So those things are law. We do have fair housing center in Michigan that does excellent work. MSHDA has some fair housing folks at the MSHDA building as well. So if you ever feel like there's any discrimination going on during the application process, during the buying process, if you think you're being treated unfairly, those resources are always there for you. And then after the fact, after you purchase the home as well, you have a right to live in that home. You can do what you want with it. Those things are pretty evident, but usually the issues come about at the beginning of the process, during the application process, and during the purchase of the home. But there are centers set up for that, for fair housing in the state of Michigan through MSHDA and elsewhere.
And that's one of the main questions that come up, you guys. What do I do and where do I go if I think I've been discriminated against?
Yeah, well, the Fair Housing Center of Michigan Southeast office, you can Google that. I think they have attorneys on site that can help you with any issues that come up.
Okay, great.
Yeah, because
Let me just say that fair housing has there are a list of people who who are not supposed to be discriminated against. There are laws and rules. But what I'm going to say now may be considered political. Right now, our fair housing centers in Michigan are suffering because of the new federal laws. And so if you are willing to donate to your fair housing centers, please do so. Fair housing.
They'll need our dollars.
Yeah, they need our dollars and sometimes even our time, to volunteer. But it's important to know that if you feel as religion, color, race, if you feel that you have been discriminated against, please go to fair housing centers or civil rights department. Unfortunately, there are backlogs right now. Our fair housing centers, there are about 6 of them in Michigan. The closest one to us is the Metropolitan Detroit Fair Housing Center. But they're suffering from the need of money. And the Civil Rights Department is so backed up, I'm told that at this point they're not able to to do anything. But go anyway.
Right.
File your complaint.
Right. Okay.
Along the
I
lines
want to
of
get through a few more. Do you have questions?
I do. Along the
Okay.
lines of that conversation, a question from the audience is, can you give an example of discrimination other than race that someone might come up against?
That was going to be one of my questions. What accommodations are available for people with disabilities?
Yes, I was going to say disabilities. Statistically, right now, disabilities is number 1. Let me think back in my history. If a person needs to have, let's say grab bars, or a ramp, they can do that. The seller doesn't necessarily have to do that, but they do have to allow that individual to make those changes. If there are changes that are made now, there's ADA. If there are changes in properties that are made now, then under a certain dollar amount, the landlord can be responsible. But the allowance of the individual with the disability to make those changes is a must. And certainly the one that I can remember is a veteran that was living beside a house that I had listed. And I was showing the house, and the person let him out in his wheelchair. And he asked if my husband and the seller could help lift him up on the porch. So me and my nosy self, I asked him, somehow we got to talking about being a veteran. He was a veteran. I got him hooked up with VA, and they built the ramp, and the landlord had to allow him to build the ramp.
Okay, excellent. My final question, how can homeowners protect themselves after purchasing a home? Either if you want to take that. How can
Protect
anyone on the
themselves
panel?
against what?
We're talking about your rights and long-term success.
Yeah, I think that the biggest part of that, a lot of times, we see issues where people have fallen behind on their payments, okay? And there's again laws that are set up. Servicers have to follow those laws. So, one of the things, and this is kind of like about long-term success, if there are issues that come up with making your payment, you never want to be put in a situation where a foreclosure may happen, where you actually get kicked out of the house down the road. The laws have changed recently. And what I would say, if there's any issues along those lines of being late, reach out to the lender, reach out to the servicer, because some of the laws have changed to make it a little easier and people can get a little bit more time. Now, most of this is reflected on that they can't have a negative reporting on their credit report, which is fine, but they can still proceed with, foreclosure and things like that. But I would say communication, don't be afraid to talk to the servicer, talk to the lender. You can always go to the MSHDA counseling agencies as well to get insight around issues like that too.
Yeah, I want to speak to that real briefly myself as a mortgage lender. The biggest mistake, people, is they wait too long. Don't wait. At the first inkling of having any kind of issues, please bring it to your servicer's attention, because believe it or not, the bank does not want your home. They really don't. And they will go out of their way to help you as long as you get in touch with us early, let us know there's an issue. They have a whole division that's just about modification. What can we do to modify this to make this more affordable for you? And so keep in mind, the most important thing is speak up if you ever think that you're in trouble. And there are many resources out here to help you. All of our partners, Torch of Wisdom, Matrix Human Services, Wayne Metro, all of these different, Hope United, Hope Operations, all these different services are here to help you if you think that you're in trouble. So the most important thing is communication, most important. So I'd like to end with that note and turn it back over to the staff.
Before we turn it over, we do have one more question in the chat. And this question is, how do you use equity in your current home to fund future properties and/or closing costs?
Okay. I'd like to answer that. If you have equity in your current home, there is such a thing as a bridge loan. Some lenders will allow that. You can actually borrow against your home. You can have a what we call a home equity line of credit. If you have a home equity line of credit, you can draw on that to use it to purchase a second home. People have used it to buy investment homes. People have also refinanced. If you have equity, you can generally refinance up to 80% of the value of your house. You can pull up to 80% cash out that could be used to do other things. Now, in most cases, though, if you are planning to move from one home to another, then you're looking at doing what we call a bridge loan. And that's where you're going to use that equity. And then once your house is sold, you would pay that off. So you would check with your lender. Many of them do have opportunities to do that, but they have to allow that to happen. But that's generally what people would do. They get a home equity, a line of credit, or they'll refinance and pull some money out in that respect in order to do it.
Thank you.
May I make one last comment? And that is protect yourself. We've talked about generational wealth. So home ownership is one of the ways to build generational wealth. Sustainability of that home, making sure that you're taking care of that home, requires that you have a little pot on the side so that and you check your home on a regular basis, but you have that little pot in case you see or suspect something is going on with your home. And you can use some of that equity, check me if I'm wrong, CJ, in order to do some of the things like a roof or something else,
Absolutely.
a major thing that's going on with your home. But if we're going to keep building generational wealth, home ownership is one of the ways. We must keep that home. We must sustain that home and pass it on.
Yes, absolutely. And people are paying off their mortgages every day. I'm almost there. So just so you know, I was one of those people who refinanced twice. So thank God I can say I can see the light at the end of the tunnel. So it does happen. You can get these mortgages and you can pay them off. Something else I want to mention real quickly. We always talk about doing a 30-year mortgage. Just so you know, there is a 30, 15, and a 10-year mortgage. So if you happen to have the financial capability to pay off your mortgage sooner, just know that we welcome you to do that. Okay. You don't always have to take a 30-year mortgage. You might be able to qualify for a 15-year. Pay it off. People pay it off just like they pay off a car. They do it every day. So just know that, having that, and like you said, generational wealth, we want that. So just keep in mind, you don't have to have that mortgage forever. Also, you can make extra payments on your mortgage and pay it off sooner. And just so every time you pay extra on that principal, you're beating your rate. That's a lot of people don't realize that. If you got a rate of 6 or 7%, every time you pay extra, guess what? You just made your interest rate lower because your payments are always recalculated based on the outstanding balance. So good things to know. Thank you so very much for being here.
Thank you so much, CJ, and to all of our panelists for providing all the wealth of knowledge that you all hold in your brain and use on a consistent basis to support first-time homeowners purchase new homes or helping those who have already purchased homes get into new homes. At this time, I would like to invite our attendees to put questions in the Q&A session. As you've noticed, I've been working behind the scenes and reading those questions as they do come up, and we want to get your questions answered during our live session. So if you have questions, please go ahead and post them in the Q&A section. And we do actually have an additional question here, and I will just pose this to the panel, and whoever would like to answer, please unmute yourself and answer. And the question is, are there any benefits to refinancing?
Absolutely. If you purchased a home, I'll give you an example. If you purchased a home in 2015, and then in 2020, interest drops to 2.5%, 3%, it makes sense to refinance. I actually had a really good friend of mine. I bothered her every day during COVID until she talked to the loan officer and refinanced. She refinanced her 30-year mortgage to a 15-year mortgage, and the only difference in payment was like a $10 a month payment. So even after you buy your home, I encourage people, like, please don't let your credit cards get maxed out and rack up all these collections, because if something happens and you can take advantage of a better rate, or if you want to refinance to, like I was alluding to earlier, if it was your primary residence and now you're moving to another residence and you want to, let's say, reuse an FHA or VA loan, you're going to have to refinance out of that mortgage program to use it on the next property. So you'll have to refinance the first property into a conventional. So yeah, depending on what your situation is, it makes sense.
Can I jump in on the last post or question about protection? And I was thinking, like, are they going to say this? And I just want to jump in with life insurance, protecting what you have established and protecting what you have built. I always want to throw that into our financial planning conversations, because especially if your family is depending on you, the major income earner, to make those mortgage payments, and there's still a balance on the mortgage, you want to make sure that you have a risk exposure, that that house may have to be sold if something happened to you. There is an untimely death. And so you want to make sure that you protect your family with some life insurance, and make sure that insurance is enough, not $10,000, not $20,000. If you have a $200,000 mortgage balance, those are some things that you want to consider. And that's another way that you can protect your investment and your family and generational wealth.
Yes. We have another question from one of the attendees. May I ask the current interest rate for homes at this time?
Well, rates vary from lender to lender. You know, in general, you can Google, for example, Freddie Mac does a 90-day survey of mortgage lenders nationally. And that's a good source of information. But in general, they're around 6.5. MSHDA's rates are a bit lower than that because we're a housing agency. And they just vary from lender to lender, from day to day. But in general, they're in the 6.5 range. They could be higher or lower depending on the program. CJ could probably fill you in a little bit too on how that works.
No, correct. Well, we kind of lean on MSHDA for those low rates.
Yeah.
You know, I can say, you know, there's different reasons to use MSHDA. People think down payment assistance, but we also use MSHDA because they offer the lowest interest rate in town right now, which I believe is like 5.75.
That's correct.
That you can get without a loan. So if you have the score, but you're looking for a lower rate, that's one of the sources that we go to. We also go to an organization called the Federal Home Loan Bank. They are offering lower rates too. So their rates right now are around 6.125. So these are different reasons why you might go to a different organization in order to get a rate. So those rates can vary a little bit, but they are out there. And then keep your eyes out, because Federal Home Loan Bank just had a program where we were able to offer a rate of 4.5. And that went very fast. I got one loan through at 4.5. And that was just in the last month. So keep your eyes and ears open for those programs. They will be coming around again. Most of these are federally funded. They are funded in different ways. And so the money goes very quickly. But if you hear of a program like that, you want to try to jump on it and take advantage of it.
Thank you, CJ and Eric, for that information. We have another question. Is there a limit on the number of people that may be on a loan to purchase a home?
Actually, no.
No, none that I'm aware of, no.
The most that I've done was 4. And trust me, it was a lot. But we did have 4 people on a loan. It's just it's a little bit more paperwork. But yes, there's no limit.
Thank you.
I just want to add in before you go to the next question. There isn't a limit on how many people can be on a loan, but there may be, usually there's a limit on how many loans a person can have in their name. So if you are like buying with relatives or something like that, CJ, correct me if I'm wrong here, but is it 10 that you
Yeah,
are
if you
maxed out
are
at?
if you're an investor, that's where the limit comes in. If it's a matter of not homes that you own, but financed. If you're an investor, there's a limit to the number of finance properties that you can have if you're trying to get another loan. Now, you can have as many as you want as long as you're not looking to borrow money. There are people who might have 10 that are free and clear, and then they have 10 that are financed. But if you're looking to get additional financing through traditional forms such as conventional, then they limit you to 10 finance properties, including your primary residence. So that's where that limit comes into play.
Another thing you have to remember when you have multiple people, they all have to have good credit, clean income, no liens, all of those kinds of things.
Yeah.
So
Yeah. Keeping in mind, we're going to go to the lowest middle score of all those people. That's what people always forget. It's like, well, can't, my such and such person has a score of 800. Can I add him? Yeah, but he won't help you unless he has some money.
Okay, thank you for that information. Another question here is, if you start with a conventional loan for your first home, could you ever take advantage of a first-time home buyer loan?
I can take that one then. Yeah, so MISHDA, for example, there's different criteria typically how that works. MISHDA looks at the last 3 years, if you've owned a home within the last 3 years. And you can actually be a repeat buyer, and we have targeted areas throughout the state where we totally waive the first-time home buyer requirement. So that's just for MISHDA. You don't necessarily have to be a first-time home buyer to use MISHDA because we have targeted areas throughout the state.
Yeah.
Okay.
And just to add to that, you could have owned a home 5 years ago, but recently you've been renting. So even though you've been a homeowner before and you've had a mortgage before, if you do not currently have a home in your name and have not had a home within the last 3 years, you're still considered a first-time home buyer.
Yep.
One more question here. Do you see more people turning homes into Airbnbs, or do you think it's sustainable in the long run?
I'll take that. I think with Airbnbs, it can get a little bit tricky because of the housing regulation varying from municipality to municipality. The things you can do in Redford, you can't always do in Royal Oak. The other thing is Airbnb and the arbitrage play are a little bit more risky because it's dependent on, number one, the legislation staying the same, that you'll be able to do that. So if you run your numbers based on being able to Airbnb in Ferndale, and then Ferndale has a city council vote and says, yeah, we don't do Airbnb anymore. If you don't have another exit strategy, you're going to be in a bad predicament soon. A group of people learned that lesson the hard way here more recently with COVID. When people could not travel, all of the people who had used up their 401ks and savings and things like that, banking on Airbnb income, if you don't have another exit strategy, it's going to be a long way down. So what I encourage is sure, you can Airbnb where it makes sense for as long as it makes sense, but whenever you are looking to profit from real estate, you need to make sure that if your plan A doesn't work out, you have another exit strategy. You don't want to bet all the marbles on one single investment strategy.
Location, location, location.
Okay, thank you for that. I see that we have two more questions. Do we have enough time for two more questions?
We
Yes,
got
you
about
do.
5 more minutes.
Yes.
Minutes? Okay. All right. One of the questions is, if you are a first-time home buyer and your spouse is not, can you still apply together as a first-time buyer?
Yes. Only one of you has to be a first-time home buyer.
Okay. Thank you for that. And the last question is, when using life insurance as a tool to cover my investments of my estate, how do I determine the amount of the policy?
I'll
Well, I
jump in
can,
here for that, if I could. Do you mind? Okay. I just want to jump in just to say that typically when you're purchasing a life insurance policy, whatever the goal may be, if it's not only just the risk exposure, maybe now you're looking at legacy planning. And so if you're looking to not only replace your income, if you have young children and you need to make sure they get through college, and we know college is costing a cool 200 grand if you want to fund a public institution, a little more for a private institution. And so those things that you want to include in your planning would determine how much you want to leave, especially if you're looking for estate planning to be part of the legacy for those generations that are coming behind, that are going to be beneficiaries and inside of your trust. But if you're looking to protect your assets, it's really just the calculation is based on the total, your total financial estate, your net worth, and how much you want to protect over time, because your need for insurance may reduce as you get into that area of life where you no longer need to cover. You could fund a funeral, you can fund any risk exposure. But if you now are looking and the children are gone and grown and they finished college, but now you're looking for generational planning, that's when those numbers are basically determine how much you want to leave to your family. And so I'd say if your estate is worth $500,000 today, you want to take that times 3. If you have young children, you want to consider how much it costs to send them to school based on if they're grade school age. But as you get older, your insurance, your risk exposure reduces, especially if you've paid off those mortgages and you don't have a lot of debt, things like that. So that number is a calculation based on those needs, but usually about 3 to 5 times your estate value.
Thank you for that. I'd like to thank all of the questions that we received, and I would like to turn it over to Rita Slack.
Thank you, thank you, thank you. That was a great question and answer session. Very, very interactive. And so I am here to close. And so on behalf, I am one of the co-chairs, myself and Ursula. And so on behalf of our committee for this event and the Economic Education Steering Committee, and of the Torch of Wisdom Foundation, partnered with the Southfield Alumni Chapter of Delta Sigma Theta Incorporated and the Women's Council of Southeastern Michigan, and our amazing sponsor, Fifth Third Bank. We want to thank everyone who attended today, all of you who participated. We really thank you. Everyone who took the time out, this is the finale, but who took the time out and actually watched the videos. This has been going on since Monday. So if you participated Monday through Wednesday, we thank you for that. And you have time to go back if you didn't get to watch Monday through Wednesday, watch the videos from our experts. We thank our experts that participated today, gave the information, shared your wisdom, your professionalism, your knowledge of years. We absolutely thank you on all things home ownership, buying and selling. We thank you so much. We also thank our committee. We could not do this without our committee. And we also want to tell our amazing leader of our group, our EESC group, Onika. We want to thank you for leading our group, our steering committee. We want to thank you. Without you, we could not do this at all. Thank you for all your work. And everyone, our moderator, we thank you for assisting us today with getting us and connecting us all today with this, and our host and everyone who just helped put this together today. We thank you. And we also want to tell everyone that attended today that once we're going to send out a survey. And everyone that did register, hopefully, if you're here today, you did register because you received the link, and that we're going to get the resources for every person that participated. We're going to send a survey. And once you complete the survey, we're going to get the resources out for all the professionals, the experts. We're going to give you all their information. Hopefully, you received you wrote down names, you took notes and everything. Everyone here has their own business, their own companies, their own LLCs, their own professions. So we want you to have all their information as you on your journey or in your journey or your next journey to home ownership. Buying or selling where you're at. And so we do thank you for supporting our ventures. All things Torch of Wisdom, stay on our website, Torch of Wisdom Foundation Inc.com. And we thank you.